Hey guys, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? This is our new FinTip setup here. We've got a little bit of work to do still, but if you're looking at the stock market today, the sky is falling, right? Oh my God, what's going on out there, right? You think, oh my gosh, I see all these headlines. There's all this weird stuff going on. What am I supposed to do? Well, is the sky falling? Right? I'll make this one real quick today. I'm going to share with you something that no other financial advisor really focuses on because they're not looking at the data. They don't manage their own funds. They're not looking at the stock market on a daily basis because they think, well, that's ridiculous. Don't look at the stock market every day. Look at it over 30 years. And when the markets fall, they pat you on the back and they go, don't worry, it's going to be okay. Well, here's something that's really interesting about the stock market lately. It's lulled us into this quiet sort of, nothing's happening. Don't worry, a 1% drop will just recover itself. Everything will be just fine. And I'm going to use some data here to show this with you. I tried to make this as super simple as possible so we could just do this quickly. Here's the last 3 years. Now, this chart's a little bit different. What we're looking at is any pullback off of a high. So in other words, when the stock market made a new high, we put this as a zero, right? So we want to see every pullback from a high, and that's just the way we're illustrating it. So naturally, this is the COVID drop. We had a move to highs, and all of a sudden the COVID nastiness hit us there, and we've fallen. But if you look, ever since the COVID drop off of highs, we really have had not anything more than like a 5 or 6% pullback, especially since the 1st of January 2021. So if we look from there, January 2021, look over the last year, nothing in the way of big pullbacks. It got so bad that my younger clients would email on a 1% down day and say, what do we do now that the markets have crashed? And I sort of, got a chuckle out of that. But, it's like, 1% is nothing, right? The market is quiet in here. But now, all of a sudden, we have our 10% plus pullback. And you go, all right. A lot of you go, this is great. This is what I've been waiting for. But some of you think, oh my God, I'm really nervous. It's not because you're scared of the 10% pullback. It's because the music was playing rather quietly, and then all of a sudden somebody turned it up. Not anything more than what we're used to hearing, but over the last year, certainly much louder than we're used to hearing. So let's go back a little further. Well, look at the 5-year chart. Now, what I did is I put the average here. So over the last 5 years, what you're looking at is the average pullback was 3.28% off of highs, right? Naturally, this is the COVID drop right here. This is October, November, December of 2018. We fell 20% and almost nobody noticed. It was crazy. Anyways, again, the short term, not much going on. Right now, you would say over the last 5 years, this 11%, 10% pullback is above average, right? Very much above average there. And you go, is it an opportunity? Is it a reason to be scared? I don't know. We'll find out. But the point being, it's above average. Now, if you look over the last 10 years, the 10-year average pullback off of highs right now is only 2.7%. Why? We had an amazing 10 years. The last 10 years have just been growth. COVID, growth. That's how it's played out. But what about the long run? Like if you're a longer term investor, if you're a trader, you're loving this, right? This is your thing. Get in there and do your thing. But if you're an investor, and we look back over the life of the market, really since after World War II is what I'm able to show here at the moment. The average pullback in the stock market's 9.6%. It happens 0.9% of the time, right? So in other words, you could say 95% of the time in a given year, the stock market will fall 10% or more, or at least 9.6, right? We round up and say 10. So you go, that's the average. Now you can look at this and say, we've fallen about 10 or 11. We're in the average zone. This is not odd over the life of the market. Sure, over the last 3 years, this is well above average and a significant pullback. We've only seen one other one, COVID, right? But over the life of the market, this is just an average pullback, right? This is supposed to happen. It will happen many times again. It's just average. Now, from here, it could certainly get worse. I know there's a lot of headlines out there with, the Fed coming up here in a couple days. Whatever's going on in Ukraine with Russia and what will they do, right? So there's room for the market to become an above average decline. We'll see what happens. But right now, this is actually normal. So it's a good stomach test for you if you are someone who has like a 401k and you're like, holy cow, I had money and now it's going away, right? If this doesn't make you feel good, you're investing too aggressively, right? But before you make changes, just ask yourself, did I get comfortable with a very calm, think of a pool. The pool is just kind of going like this, and all of a sudden somebody jumps in. Is that it? Like, is the pool normally calm, but because somebody jumped in, it's temporarily rough? Or am I just not good with this type of movement? I don't like it, right? So that's where you're at. You're doing the stomach test here and genuinely see where you're at. Now, the rest of the week, I'm actually going to try to highlight how do you plan for that, right? So can you take less risk, and how can you quantify that you can actually take less risk without ruining the growth that you may need in the rest of your long-term investing there? So we'll cover that. I appreciate you guys hanging out today. We'll be back at 5 o'clock, of course, to do the closing beat, where we'll cover the stock market, all the good, the bad, and unfortunately the ugly today. I'll go over that to show you what's going on. Where's the opportunity, and is it a reason to be scared, or is it a reason to maybe nibble a little bit, buy some stuff in there? We'll see. All right, enjoy the rest of your day. Thanks for watching.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.